Hello traders, welcome to a post-session review. It is Friday the 13th of September, and this is where we stand on the 5K challenge. I think we've dubbed it the 5K challenge because it has indeed been a challenge. We had a profitable day today. I only had one trade. I was aggressive with it because I had somewhere I had to be at around 11:15 or so I had to get aggressive on the management of the trade. It ended up working out being aggressive with it, but we'll cover the trade in a minute for the sake of transparency. This is the undisciplined day we had yesterday, minus 311. Today we got half of that back, more or less. We had 160 here, 160 here, and 160. The account balance is 268273, 268273. Penny for penny, we are lined up. So let's get to the chart. We have a relatively choppy, rangy market as a whole, okay, and we still have not made a new structure high above that huge main swing, which did achieve a proper correction yesterday. That was the short I took here, and then the undisciplined trade here. We covered that yesterday's post-session review, and since then the market has been making new highs here. We broke the short-term order flow, making a new high here, followed by a higher low, followed by a very weak new structure high, followed by a higher low and a very weak new structure high to retest this high over here. So overall, my global expectation was for the market to push higher. So I was looking for longs. I identified my areas of interest where the buyers were. Buyers were here, and the sellers mainly were up here, as they have not allowed for a new structure high overall. These cucumbers were areas that I particularly found of interest. You know, when I have a wider area of interest that I'm looking at, I always like to see if there is an area within the area that the buyers are respecting more. Okay, and on the most immediate order flows today, we had a market come down here, had a new structure high, and then we had an expectation failure of a new structure low here. Okay, so immediately once price came back here and broke below this again, making a second new structure low, okay, after a proper correction. Okay, I'll identify that here. All right, so we had a proper correction here. The market came down to almost a 618, then came up and then broke below. Immediately I'm thinking, okay, what is happening from a harmonic point of view? Okay, that doesn't mean that I'm going to wait for that and take the long way down there. That may or may not happen. Now, what is consistent with the overall expectation of the order flow is that we have a very weak new structure high, and overall we've had very deep corrections. Okay, almost 100% corrections. This is a big indication to us that the market is breaking down, that the buyers are getting worn down, that the sellers are overall trying to accumulate or consume the buying that's taking place, and it's becoming very expensive for both parties to move price. Okay, eventually imbalance will set in. Whoever's been able to accumulate as a whole or absorb the other one will eventually win this battle. The battle is expected to be won by the buyers, as that is the expectation of the longer term and the shorter term. Okay, we did get a complex correction into this area here, and one of the things that we have to ask ourselves is, what are we looking at from a pattern standpoint? Is there a pattern here? Is there something that we can look forward to? Let's do that real quick. Our drawing tools, we're still working on this tool, guys. Be patient. It'll be out soon. It's not quite ready, but you know, initially we had this here, and initially we had this. Okay, and that put us as you see, it labels a crab. These are my rules. My rules seem to be fine. It's got Carney's that are not working out too good right now, so it will create a situation of a possible crab pattern here. As the market then proceeded to produce a deeper correction, and we have this here, we have a possible Gartley pattern that completes somewhere down here. We can see that we have the area of interest here, and then we have the 1-to-1, which is this little gray line that will complete here. So this is the actual termination of the pattern and the possible area of interest here to get long. Okay, I got long earlier on the rotation. Again, this tool is coming and it'll make your guys' lives a lot easier as long as you identify the proper anchor leg, and I'll make a video around that. Okay, but I was speaking with my group while this was happening, and unfortunately I got a really bad fill on this. These two candles happened instantaneous right after this, and I actually got filled here. I saw that the sellers had defended this little area here, as we can see, but this cucumber represents more of an area that the buyers need to overcome, okay, and defend. So once the price came up here and the sellers came down to this area, and then the market pushed up again, this was a major victory for the buyers. And then I wanted to identify the areas that the buyers needed to defend again, to let me know whether my trade was gaining strength or losing strength. Okay, I also knew I had to leave early, and where my cross area is, if you look down, is 10:51 already. I have to leave at 11 or shortly after 11 to take care of what I had to take care of. I didn't have a whole lot of time, so you know, my options were I either get to a break even prematurely, as the break even point is up here, or I get aggressive and just start trailing at some point on decision candle. So I made the decision that I will start doing that once and if price got to this area here, because this is the area the sellers ultimately came in to push price all the way back down, and I felt strongly that the sellers would likely be willing and able to defend that area. Okay, as we can see, they came here to defend early, so my cucumber identified what, where the buyers had come in, okay, to absorb, okay, and ultimately be able to take price higher, with the exception of here. But they did so here again. They tried here and they failed. They tried here again and they failed, and they also tried here again and tried, but they didn't really get much higher than this area. So I knew this area was gaining strength. I knew the sellers were wanting or would be eager to defend that area again. So again, as it got already, I was already at 11. I was already getting the eyeballs from the misses. Once price touched that area here and interacted with this, I did trail on the decision candle, which at that point should have been here, and I would have survived longer, but this candle did close higher, so in theory, in technicality, is a decision candle. I gave myself just a little extra room, and I see I got taken out by maybe a point, and then price rose higher. Nonetheless, I needed to leave, and I decided to trail aggressively and take the points, and I ended up getting trailed out there. So overall, I was happy. This pattern is still valid. The market is still working towards that. This area is an area that the buyers are likely trying, or likely no, they're trying to defend. So now it becomes important to see where the sellers defend. And if we look left, what is the most prominent area for the sellers to defend? You know, you have to ask yourself, where did the sellers come in and score a win? They kind of came in here, scored a little win. They weren't able to get a win past that, and they came in here to score a win. So anywhere between here, okay, and here is where I would say that the sellers are likely to come in and score something. Okay, and as you can see, as soon as price gets to this area, the sellers are trying to attack. And then you ask yourself, okay, you know, this battle is being fought in a very tight area. Where are the buyers? Where, if the sellers come in here, where do the buyers need to defend? Right here. And look at the attempt to absorb the right here, the absorption on the buyers. You know, unfortunately, we also have the situation we are in between contracts. So a large portion of the trading community is trading this contract, and another large portion of the community is trading the other one, as they're both pretty close. They're about 60-40 split right now. So how am I going to handle whether I trade this contract or the next contract? I already have it loaded here, okay? So what I'm going to do on Monday, I'm going to take a look at both, and whichever one has more candles means that's who has more transactions, which means in theory more people are trading that one, and that's the one I'm going to move towards. So once I see that switch between, you know, the old one and the new one by who has more transactions, which one has more candles, which one has more order flow, that's when I make the switch. I don't have a clear cut, it's 2 days before the expiration or 1 day before, because it varies. Sometimes, depending on what traders are participating in the old one, where the longer terms or more the retail traders, or depending on what dynamics are happening in the market at that point in time, will tell you and how soon you need to switch over to the other one. Definitely, if you're a swing trader, I would start working with the next one, just in case you get stuck in a trade. It will be less complicated with the rollover and all that stuff. And that's about it, guys. That's my trade for the day. Small win here of 32 points. And that's pretty much the technicals involving this. We are expecting still for the market to make a new structural high. There's still a potential Gartley pattern at play here, which favors the order flow, which favors the expectation. So it would be a good risk reward entry to the upside. And I will tell you that the sellers are trying real hard to prevent that new structural high, and they are gaining ground. So will this be one of those expectations? I mean, I'm sure as far as a short-term expectation that ultimately fails, I don't know. It wouldn't be an expectation failure on the main swing that's in play now, because it's gigantic, and it would just mean a more of a complex correction. But we do have realignment of the shorter term, and we have alignment of the with the I guess the intraday or the slightly longer term order flow. But we do have a potential Gartley pattern working out here that has good that will terminate in a good confluence with an area that the buyers have bought off very well and have fought off this vicious attack here. This was very good, and the sellers were unable to get back down there, and on every attack they've gotten a little less, which means that the buyers are technically kind of wearing down the sellers here, not allowing the sellers to come in. Another way that you can visualize this is that every time the sellers come in, the buyers come in and take up the majority of the distance. They didn't so here, but every time they came in, look, the buyers overtook them. Sellers came in, buyers overtook them. Sellers came in and buyers came in, but weren't able to take hold of it. It's costing the sellers a tremendous amount of money to just be able or try to stop the buyers. But on the flip side of that coin, isn't it also costing the buyers a tremendous amount of money to continue to keep taking price higher? It is, but we're in a bullish market, we're in a bullish run, and we have to give the buyers or the bulls the benefit of the doubt. The expectation is on their side, and we should never ever trade against that. The harmonic pattern that's setting up favors that, and even from an ABCD standpoint, if you're just looking at that as well, it also favors them. That my original target was up here, as you can see, the 1-to-1, but I did not get an opportunity as the market did not move officially in favor. I started dragging and I had to leave. Aside from that, that's it. I'll catch you guys next week. I am going to be working on those presentations over the weekend, and hopefully we'll get them out over the weekend. Thank you very much for your time and for your attention and your support, and continue to trade well. Follow your rules. Get your trade plan together if you don't have it. Get disciplined, get serious about what you're doing, and start making real strides towards your trading goals, okay? Thank you very much, and talk to you soon.